This video is called Tom Lee, the next 48 hours will define your financial future.
Billions of dollars worth of market cap is being wiped out, and April 2nd is what President Trump calls Liberation Day. This Wednesday, a key day when many tariffs are going to be finalized. We're about to experience the largest mass-scale trade war experiment in history. And while many are arguing it is time to run for the hills, well, Mr. Tom Lee has been sounding the alarm that April 2nd is actually going to be one of the most consequential days in stock market history, a day of bottoming. He's arguing for a powerful V-shaped rally there on out. And so I've piled through endless Tom Lee interviews, posts, tweets, and other updates to be able to bring you the biggest points that you need to know. In today's video, we're going to break down exactly what he's saying, his predictions, and where opportunity lies. And then we've got a sponsored segment on VERU, a little-known biotech tucked away in Miami's Silicon Beach that could be on the verge of disrupting a $470 billion market.
Yeah, I skimmed through this earlier, and he spends like 5 minutes on this one ad, basically, so we will not be watching that part.
We'll explain why you may want to put it on your risk. Always do your own due diligence on all ideas versus reward is attractive here. Tom Lee has zeroed in on April 2nd as a day of massive importance, not just a pivot, but a potential spark for a rally that could redefine the second half of the year. Lee believes we've crossed a psychological breaking point. Sentiment is crushed. Everyone from institutional investors to retail traders is scared. But the fear, he says, is setting the stage for an epic contrarian move. So what makes April 2nd different? It's not just about another jobs report or another CPI reading. It's the convergence of clarity. Clarity on multiple fronts, policy, politics, and positioning. Markets hate lack of clarity. And on Wednesday, well, Tom Lee is arguing that the fog is going to lift. Look at this tweet he sent this morning. Quote, over the weekend, fund manager convos. Common view, economy will tank post 4/2 Liberation Day. Anxiety high due to, number one, need clarity. Number two, how much tariffs will hurt. And number three, fears of Trump policy. Again, here he's implying that once we get clarity on tariffs, that will bounce from peak fear. Obviously, markets rallied massively after the Trump election, expecting Trump to be all guns blaring, pro-business, pro-stock market. And now they're in the complete opposite of that, peak panic, as they say, hey, look, Trump is cracking.
Oh, I saw this the other day, and I wanted to mention this. So this, in my opinion, is a very, very deceptive type of chart. And this is why I really, really, really like watching other people's videos and talking about them, because dude right here is pulling off, in my opinion, like, geez. So this is snake oil salesman type of charts, right? Notice, all of them are red. Notice that when they're in an uptrend, they're all green. When they're in a downtrend, they're all red. When's the last time you ever saw a chart like that? You don't. Unless you enable what's called Heiken-Ashi. Look at that. We just changed from regular charts, regular candles, to Heiken-Ashi. I wonder if I can do this. Yes, I can. Okay, cool. This will be really cool. So let's go to the dailies. And let's go to the dailies over here. Edit this chart, daily. Okay, with regular candles, let me zoom in. Okay, so Heiken-Ashi candles show you basically a trend, but they don't give you that much data. And in fact, I think they can actually mess you up pretty hard. If we look over here on this big down move, right, all these are red candles. But in reality, that's not what happened. That's not at all what happened. There were definitely green candles all the way down. And then over here, you've got, multiple green candles with one red one here. And that's not what happened. There were multiple green candles with one red one here. Actually, that's what I said there. But this is a disingenuous type of chart, in my opinion. And it's one of these that people like to pull out when they want to look smart, right? They want to look smart. So let's look at this trend from August of 24 till September of 24. Right. These candles in this time frame right here are the same. Yeah, look at these. This looks like this is the most green thing on earth. This is the most exciting time to ever buy. And then over here, yeah, you've got some gaps that are not even acknowledged here, like they didn't even happen. You've got some red candles here, like they didn't even happen. And it's like look at the wicks on these candles. I don't know. Point being is that when I see a chart like this, that's a giant red flag for me. That's somebody trying to prove a point. That's somebody trying to say, hey, look how smart I am. I got in with all of these green candles here. Whereas in reality, it didn't look like that. So I don't even know what the point of these are. I really do not know what the point of these are. But when I see that gives me a little bit of rubs me the wrong way.
down on a lot of U.S. industries. Most U.S. industries do have heavy exposure abroad, and quite frankly, some of these tariffs are obliterating those connections, which means that you're going to see a massive economic restructuring, which can be quite painful. And so fund managers are trying to move their money around so they don't have to take a massive haircut as this restructuring happens. But Lee here is saying that, look, the fear is already priced in. He's implying that once we actually get clarity on tariffs, that
Okay, I'm glad you said that too. And that's what I love about these videos. Like, they're going to give us talking points. When something's priced in. I remember hearing that in my career in finance for years and years and years. Oh, it's already priced in. It's already priced in. It's already priced in. Well, if it's already priced in, how can stocks ever move? If something is already priced in, then wouldn't Palantir already be at $1,000 a share? Because that's what the YouTube gurus were telling me. If it's already priced in, then that should be there, right? It should be there. Most dangerous word in finance. Tesla, right? If they knew that Elon was a crazy person and it's going to cause all these issues, because a lot of people are thinking that, then why wasn't it priced in on this side? The idea of it something being already priced in, that just drives me crazy. That's so stupid to me.
will bounce from this peak fear that we're seeing right now. Now, is he right or wrong? Only time will tell, but his case is based on historical precedent. In 2018, following a similarly sharp panic in the VIX and collapsing sentiment, markets began one of their most aggressive rebounds. The same cues are flashing now. Investors, he says, are myopically focused on headline risks, tariff tensions, Fed indecision, and political volatility. But beneath the surface, conditions are aligning for a reversal. So let's zoom out. We've just gone through the fifth fastest 10% correction in the S&P 500 since 1950. What's important isn't just the speed, but what it signals. Tom Lee argues that historically, moves of this velocity are shocks, not bear markets. And shocks, Lee argues, are typically followed by quick, violent reversals upward. But it's not just price action, it's the positioning. Money market assets are up $850 billion in less than a year. When you're looking at hedge fund exposure, well, net long positioning is near pre-COVID lows. Margin debt is falling, not rising, which shows deleveraging, not reckless speculation. This is textbook fuel for a rally setup. Capital has fled to the sidelines in droves. And when clarity comes, the reentry could be dramatic. Rick Ryder from BlackRock puts it perfectly. We've gone from animal spirits to animals in hibernation. But
this I agree with. I agree with tremendously. Man, I can't go check the receipts, but I think I was saying something very similar around this time frame over here. Like, this irrational exuberance feels really off the charts over here. And then the market breadth contracted. That's when I went to cash, and then right down after that. But to Tom Lee's point, Tom Lee is saying that because it went down so fast, it should go up just as fast, right? It should go up. Once again, most dangerous word in finance. And nobody can predict that, right? Nobody can actually say, well, if it went down that much, then it certainly needs to go back up just as fast, right? Not necessarily, right? It could go months. It could go potentially years before it starts to recover. But you don't have to sit on the sidelines and guess. What you can do is you can trade short, right? A lot of people don't know how to trade short, and that's okay. There are definitely ways to learn. Following along with us is one way to do so. Or you can sit in cash, which is what I've been doing, because I haven't had anything set up for a hot minute. And I don't have any FOMO. There is no FOMO. Because if a trade doesn't set up for your trading plan, you don't even need to be looking at it. You don't even need to be looking at something like Celsius if it wasn't in your trading plan to begin with. If this doesn't fit your trading plan, then it shouldn't even bother you that it's doing its thing. Stocks move all the time. You don't have to try and find every stock every day. No way. Just sit on your hands and wait for it to come to you. And that's why this makes a lot of sense to me. Animals in hibernation. This is exactly what I'm doing. No more FOMO when you already have that trading plan in place.
Tom Lee clarifies, look, this is a good quote, but hibernation is not extinction. You got to understand, it's not despair, it's waiting. Companies right now across America are pausing hiring, delaying investments, and pulling back on CapEx, but they're not cutting at recessionary levels. They're holding their breaths, waiting for Washington to deliver clarity. Right now, if you're an American consumer or an American company, you're thinking, okay, well, I definitely don't want to spend right now. I definitely don't want to invest right now. I definitely want to play it safe until we see what's going to happen and until we get clarity. That pent-up energy doesn't just disappear, it builds. And when sentiment shifts, it comes back online fast. Think of it like dry brush before a wildfire. All it needs is a spark. So April 2nd is the turning point, Mr. Tom Lee says, and April 2nd could be that ignition. Tom believes 3 policy levers could flip. Number 1, tariff clarity. The administration is likely to announce a refined trade stance, less adversarial and more strategic. Number 2, regulatory rollback. Pressure is building to unwind red tape choking businesses, especially in energy and tech. And Tom Lee is expecting this regulatory rollback to more than make up for some of the tariff policies. Number 3, tax reform extension. Much like 2017's rally, expectations for extending corporate tax cuts could juice sentiment. When all 3 of these catalysts hit, it's not just going to be optimism. Tom Lee argues it's going to be rocket fuel. Now, Tom Lee is yelling at the top of his lungs that everybody should look at Tesla right now. It's a proxy for broader issues that are going on right now. Tom Lee calls Tesla Exhibit A, not just because of its stock chart, but because of what it represents. Tesla has been battered, down over 50%. But why? It's not just earnings, it's political. Elon Musk's entanglement with the controversial Doge cost-cutting initiative has made Tesla collateral damage. But Tom Lee argues that the White House can't afford to have Elon Musk walk away from Doge. And if Tesla keeps crashing, that risk grows. So behind the scenes, there's likely an invisible hand ensuring stability, and Tom Lee argues it's the same thing for broader markets as well. And since Tesla is, after all, deeply tied to institutional portfolios, it becomes the poster child for the broader rebound. And so this brings us naturally to the Trump put. This is now becoming an increasingly provocative concept as markets go down and Trump suggests that he doesn't care too much. But at the end of the day, a lot of people are arguing that, hey, look, Trump will react if the stock market goes down too fast. Yeah, we've long talked about the Fed put, the idea that Powell at the Federal Reserve would step in to rescue markets if necessary. And in 2020, you had the stimulus put. Well, now it's a political put. The Trump administration has incentives to keep markets afloat heading into the next election cycle. Next year in the midterms, people are going to be running on what happened this year. But also even right now, Trump's popularity is very, very important to be able to pass his massive agenda. So Lee argues that, look, there is a Trump put here. You can feel confident buying the dip because at the end of the day, Trump will rescue the stock market. At least that's the argument that he's making. Lee is making an argument that sounds very, very familiar. Argument that says, yeah, Trump is trying to crash the market early on, lower long-term rates, and then by the time elections roll around next year, well, markets would already be rebounding and people would be in a much better, more stable economy. You get all the pain and rug pulling out early in the administration, and then by the time midterms come around, well, markets are rallying, the economy is improving, and people have a better opinion. He also made an argument that, look, the Mag 7, you got to pay attention to those. Those are the giants like Apple, Microsoft, Meta, Google, Nvidia, Amazon, and Tesla. Right now, they're a great deal. Valuations have reset. Growth is intact, and most importantly, they're liquid. In terms of uncertainty, institutions need liquidity. These names will be first in line when cash returns to the market, so don't fear the AI bubble narrative. Lee says that's all noise. Structural demand for compute, automation, and cloud is not slowing. Okay, we need to talk about where the firepower is hiding. So net long exposure by hedge funds, Tom Lee says, is near multi-year lows. Retail cash positions are at decade highs. Corporate buybacks are picking up. And so the translation here is there is more cash on the sidelines today than we've seen in over a decade. And when that cash comes back, it won't tiptoe, it'll stampede. And so Tom Lee says, hey,
to that point, I've mentioned this many times, right? When you get to a stock, let's go look at, we can look at Celsius. Does it have a, there we go. Some really, really high fear ratings, right? So fear and greed goes from 0 to 100 inside of OVTLYR. And you can see there are points when it was down at 6, right? That would be extreme fear. That would be way over here, right? At 6. Extreme fear. And then what happens when so many people are fearful, right? I've talked to you about this before. When it reaches these capitulation points, you can see really strong snapbacks. Let's just go to something like Target. Let's see. So it's reached a really strong fear level down here, and we might see a snapback. We got a buy signal on that today. Let's go look at SPGI. When it reaches a really strong level up here, 73, not the strongest level, it can have snapbacks. So when people get really fearful or people get really greedy, what's likely to happen? They've run out of people to sell. They've run out of people to buy. And then what happens? Like, here you go. There's an example, right? It got ultra greedy down here. And then it got ultra fearful up here. This is actually a great example. Got ultra greedy up here, and then it snapped back. Ultra fearful down here, and then it snapped back. So when we talk about be fearful when others are greedy and greedy when others are fearful, this is what we're trying to say right here, right? Is that when there is no longer a point where sellers are going to continue on, right? It's not in the midst of something going down, right? It's not in the midst of when AMD is going down for months and months and months. It's when it's reached a point where it's unlikely that it's going to get even more fearful and things are starting to turn around. That's what we're talking about here. And it's unlikely that there's going to be more sellers. So what's likely to happen is that those buyers will step back in. And maybe that's Tom Lee's point, is that every buyer will eventually turn into a seller at some point. And maybe what he's trying to say is we've had enough sellers that are going to now turn into buyers some point soon. Maybe that's what he's trying to get across.
Look, you got to look at our granny shots. They're disciplined multi-theme portfolio strategy. The idea of the granny shots is to only invest in stocks that score high across multiple megatrends: AI, labor disruption, decarbonization, and demographic tailwinds. Current standouts: well, Palantir, which is AI plus government tech; 2, AMD, which is semiconductors plus AI hardware; CDNS, which is design automation; Netflix, which is consumer plus digital content; GE Vernova, energy transition. And these aren't meme stocks. These are structurally advantaged companies ready for breaking out. Every name here is either number 1, beating earnings; number 2, benefiting from policy tailwinds; or number 3, positioned for demand acceleration in a reflationary backdrop. And that is why Tom Lee says, hey, you got to be looking at these granny shots, because as they dip, they're screaming buy, buy, buy. Tom Lee argues that we are in a classic chaos meets opportunity territory. Tom Lee gives an action plan for how to position. Number 1, scale into high conviction positions now. Don't wait for April 2nd. Number 2, accumulate quality growth with earnings power. Number 3, track Tesla and S&P 500 levels daily. Number 4, monitor policy chatter for tariffs/tax/regulatory updates. Number 5, tighten stop losses, but stay long. This is not a time for fear. It's a time for precision. Now,
let's go back just slightly. This is interesting. Scale into high conviction positions now, but don't wait until April 2nd. I can agree with that if your high conviction position is performing well. Let's go look at the S&P 500 map. Let's see what has been performing well over the last week. That'll give me some ideas here. What's been performing well over the last week? Loading. Not a whole lot. AT&T. Let's go look at AT&T. Yeah, there you go. That is a stock that has been performing well. But when the market is working against it, right? When you've got 40% of a stock's move is due to the market, we know that the market is moving down right now. We know this. 30% due to the sector. Let's go to XLC, which is the communication sector. That's working against it. So you have, if we're just talking about AT&T on its own, the market's weak, the sector is weak. So the only thing that's holding it up is the stock itself. Now, this would be even better, even greater, if it had the market and the sector behind it. So this stock does show a lot of relative strength. And if the market turns around, if the sector turns around, it could be your real leader, real huge outmover. But we don't know. We don't know when this is going to stop, right? We can use the outlier trend template to tell us when it is stopped, when the 10 crosses back over the 20 and prices over the 50. That'll tell us when it is stopped, but we don't know when it will stop. Accumulate quality growth on earnings power. Sure, if you care about that. Track Tesla and S&P 500 daily. That's super interesting. So Tesla, according to them, is the proxy for how the market's going to do. Okay. Well, Tesla round tripped this 100% up move over the last few weeks, over the last few months. I don't know how great that is. Monitor policy chatter for tax. I mean, I don't keep my ear to the ground for news. I really don't. I have other things to do. So if you've got time to do that, by all means, but this is not something I would do. Tighten stop losses, I agree with. Take your position sizes and shrink them if volatility has gotten too big. But stay long. There's a time to be long, and there's a time to be out of the market. The time to be out of the market is right now. So speaking of, let's go look at what the market is telling us, right? We do that by looking at the master key. The master key has given me over 80% win rate. So let's go take a look at this. So first off is the SPY buy or sell signal. So we'll go into outlier. We'll go to the watch list, and we'll go over to the SPY. So the SPY got a buy signal on March 28th. And looking at the SPY itself, we can see the buy signal that came through. We can see it's getting less fearful each day so far. We're up to nearly 35 on the fear and greed chart. So that puts us right around here on the fear and greed chart. So it's getting a bit less fearful. Now, all the pieces that make up the S&P 500 also seem to be getting less fearful on average. So that's a good sign. Next, so we got a buy signal here. Market trend. We've already talked about that a couple times, but let's just review. We have the 10 under the 20, price under the 50. So this is absolutely a bearish trend. It does have a couple order blocks down here, which have already shown to be some pretty good support. So maybe that'll be the bottom. We'll have to see. But currently the trend is still down. Market breadth. Market breadth is measured in OVTLYR by the number of buy signals that we have. So if we have all the buy signals, market breadth would be at 100. We have 27 new buy signals today, such as Sandy Spring Bancorp. We have C Limited. We have Cisco, and we have Target. Those are just a few of the buy signals that came through today. Then on the bear list, we have 68 new signals for sells today. We have AM and Stero Midstream. Oh, actually, that was one. That actually is one that I want to look at here in just a minute. Cool. We've got BLD, Top Build Corp. We've got Cadence Bancorp, and we've got Seco Environmental Corp. So looking at the bull list, and then taking that one step further, is how many stocks are on the bull list. And that's what's measured right here. We do have a crossover today showing that the 10 EMA, the moving average of how many stocks are on the bull list, is actually starting to come down. We're getting more sell signals, less buy signals. And so that is now bearish breadth. So we have bearish breadth, we have a bearish trend, but we do have a confliction right here, a conflict with a buy signal on the SPY. And then if we look at a couple of sector breadths, let's take a look over here. You can change this down to like the financials. We can see here that is also peaked and starting to come back in. Hasn't quite got the crossover yet, but that seems to have peaked on the financial breadth. And then we can look at like the staples. Let's look at staples. Oh yeah, look at this. Staples actually have been going down, and it's not quite crossed over today. Really close, but not quite crossed over today. So market breadths, sector breadths are also in conflict as well. But so this tells me that the master key would lock me out of trading. The master key would lock me out of trading, and because it's not an all in confluence here. You need that whole confluence, that whole picture to start getting long. So real quick, let me introduce myself. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And let's take a look at some of your stocks. So put your stocks in the chat. Type in something like Apple long, Netflix short. I need to know which direction you're looking at. But I do want to take a look at a couple screener picks, see if anything pulled through here. So if I go to the screener, this will show you my criteria for going long. And so we could look at, there's only 2 today that would have matched my criteria. Let's look at T-Mobile. So if we look at T-Mobile, we can see over here, it's got this buy signal that just came through. Your 10, 20, and 50 have already crossed up. So it's in a bullish trend. The fear and greed is up to 52 right now. So it's moving up. So where would that put the fear and greed at? That would put it at just over neutral right there at 52. And then the sector itself was getting less fearful. Looks like it might start to get a little more fearful at this point. So nearly perfect score here over on OVTLYR. And then if we go and look at the chart for it, see if there's any order blocks in the way. It's actually got a support order block down here. You can see some old notes where I traded it as well. So yeah, actually TMUS looks pretty sharp to me. However, because of the market, I'm going to make sure that nobody is ranked a strong buy. Nobody's going to be ranked a strong buy because the market and the master key are locked up. So for me, TMUS actually would be a weak buy for me if I were to rank it. And then since that one pulled up on the sell signals today, let's go look at AM and Turo Midstream. I don't know why this one is a popular stock, but it is showing to be a trending stock today. I can click it right here inside the dashboard. AM. Yeah, look at that sell signal today after this huge buy signal came through here. Now, this is one that has that really strong up move. It's currently at 86, so nearly 87 on the fear and greed, which would put it right up here in extreme greed. And what happens in extreme greed, right? What happens in extreme greed is that those people who got really greedy all the way up, they're looking to start selling. And that's why we got that sell signal right there. Even though the sector and the energy sector is getting more greedy, the stock has peaked on greed and we got this sell signal. Let's go look real quick over here. Oh, and it's got an overhead order block. So if you are in AM, I think now would be a great time to be taking some profits. So let's take a look at your stocks, right? Put your stocks in the chat. And of course, if you're ready to save time, make money, and start winning with less risk, you can do so over OVTLYR.com and get OVTLYR a whole year. The annual pass for just 82 cents a day, which is 64% off the monthly price. And if you're on the monthly plan, you're ready to upgrade. Just one click upgrade, you're going to save 64% just that easy. So let's look at your stocks in the chat. Let's go. Richard, we already talked about AM. How good timing is that? Driz says, Chris, been in a bear market for weeks. Any reason you have not shorted, or do you prefer longs? I actually have shorted. Even though I put on only 3 trades this year. The last one that I put on, hang on, let me just go over here to my results real quick. 2025. So I went 4 trades this year. I don't know why I thought 3. I have 4 trades this year. This is my return so far this year. So not the best start to the year, but also I'm only down 64 basis points where the market is down 5%. I'm okay with that. I've only won 2, lost 2, and I believe only one of them was a short. No, 2 of them were shorts, IBN and SCCO. So I do look for shorts, but the master key has been locked out, and the master key could stay locked out for weeks at a time, and that's okay because we want all of these signals to be in confidence. So let me look over here. Yeah, only price pays, exactly. Ari wants to look at gold long, GLD long. Let's close a couple tabs here. Let's go to GLD. All right, GLD long. Got a buy signal inside of GLD. That's a great spot. Getting more greedy. This is up to 74 on the fear and greed over here. In fact, I think I need to copy this. It's going to save me a moment if I move it over here. There we go. That's 74, so it hasn't quite hit extreme greed, but it's getting close. 74 on GLD. In a really strong uptrend. Your 10, 20, 50, all moving that way. Any order blocks here? By the way, order blocks are coming in OVTLYR in the near future. We're still working on it daily. I have a underneath order block, a support order block. GLD looks great. I would actually rank GLD at this point a weak buy because nobody's getting a strong buy. But GLD looks really, really, really solid. I don't have any reason to doubt this one other than the market being weak. Citigroup, I believe it's just the letter C, right? Citigroup is the letter C. Now, it's sitting on a buy signal, but it did have a pullback here. So, of course, be sure to keep your risk in check. We do have the 10, 20, 50 is now it's been cross south for a while. It's got the fear and greed is moving up. Currently sitting around 50 on the fear and greed, 50.58 it said. So it's got a neutral rating from that regard. And taking a look here, I mean, I don't really love where did it go? Yeah, this one does not stick out as a great one to me. Does it have any order blocks? It does have. It's got order blocks on both sides of it. So for me, this is one that I would not trade. So I would rank this as a neutral. Reason being is that you've got a buy signal which is positive, but you're still within a downtrend. The market's still trading against you. Your fear and greed is getting better. The sector is getting better. But then you've got this overhead order block on here. So for me, this is not a sell or buy. This is really right in the middle to me. So I appreciate that. Damon wants to look at RSG long. RSG. All right, RSG. We got a sell signal over here. We've got a peak on the fear and greed, and it's coming back down. Still sitting at 675 on the fear and greed. So it's still sitting over here. Right at the border of extreme and regular greed. Extreme and regular greed. You've got the sector itself getting more fearful. You've got your 10, 20, 50 are still crossed up. And let's see if there's anything else in the way. RSG. Yeah, you've got an order block down here that could provide some support. You can see it's bounced out of it a couple times already. So RSG looks like a time, honestly, to me, to start looking to take profits. So I put that in weak sell. I put that as a weak sell because you do already have that sell signal. You're already really extended on the fear and greed heat map. Your sector is getting a little bit more fearful. And I mean, now could be a great, absolute great time to take some profits off of that. Let's look at, Richard says, this is well worth money. Very cool. ADP long from Huey. ADP long. All right, ADP just got a buy signal. The 10-20-50 isn't quite crossed over just yet, so it doesn't quite have that green overlay. The green overlay shows you when it's trending upward. It's really close. It might come today or tomorrow. So you got your buy signal there, potentially start of a new bullish trend. It's getting less fearful. This is up to fear value of 42. So where would that put us at? Fear value of 42. Put us right here on the edge of neutral. And the tech sector, though, is getting more fearful. So you've got a positive here, a negative here. And then if we look over here at ADP, you've got, a really strong order block underneath it. So I'm actually going to give this one a weak buy to me. I like it. But it would be a much stronger buy if the market were strong along with it. Jesus is looking at Ford. Jesus just heard about the Ford F-350s are now $350,000 each to go with the price tag, right? The name of the truck now goes along with the price tag. So he's excited. Sitting on a buy signal that's been there for ages, even though it's gone sideways, a little bit down since that time. You've got some bearish trends and bullish trends all amongst that. But right now, it looks like it's sitting in a bullish trend, still with the bullish buy signal. The fear and greed has really, really come up. It was down at 36. Now it's up at 48. You can see just how much that's improved. The discretionary sector was improving as well, starting to get a little more fearful over the last couple days. So we've got a buy signal. We've got an uptrend. We've got less fear moving towards greed. So all of that's good. Let's look over here on the market real quick, see if anything else is coming through. Oof, then you've got a couple overhead order blocks here. So for me, this would go into the neutral. This would have been a weak buy had it not had these double overhead order blocks. So I think this could be a tough one to get through right here. Your live stream coincides with Felix's. Well, you tell Felix he needs to start watching our live stream. That's what I say. Felix needs to start watching our live stream. Med school visuals. Sorry, but the background music is annoying. I know, dude. I'm sorry. I turned it off earlier. Is the fear and greed similar to the RSI? Not at all. Not at all. RSI is actually a pretty interesting indicator. It shows you how much strength a stock has to itself. So let me add that on real quick. Relative strength index. Relative strength index. This shows how much strength it has to itself. But it doesn't tell you how much fear and greed are along with it. So for example, if it's above 50 on the RSI, that actually means it's trending really strong. Another way you can trade it is if it goes over 80 or over 70 and then comes back down, that could be a shorting opportunity. But as you can see right here, that wasn't a great shorting opportunity. It might have come down a little bit, but it still had a lot of strength with it. And then right now it's coming under the 50. So now it's losing a lot of strength. Shouldn't be any background music playing right now. I don't see anything playing on my stream at all. So that was super cool. I hope that was useful to you. If it was, the way that you can pay me back is just by telling everybody you know about Outlier. And of course, come back this afternoon where outliers like us will save time, make money, and start winning less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and I recommend you have a fantastic afternoon. We'll talk soon.